Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. In the US, the Fed hiked by 25 bps as expected and kept everything unchanged at the last meeting. Fed Chair Powell reaffirmed the data dependency and kept all the options on the table. Inflation measures since then showed further disinflation. The labor market displayed signs of softening, although it remains fairly solid. Overall, the economic data started to surprise to the downside lately, but last week the ISM Services PMI and jobless claims surprised to the upside. Fed members are leaning more towards a pause in September, with the market expecting the Fed to pause at September, but there's a 50-50 chance of a hike in November. In Japan, the BOJ kept everything unchanged at the last meeting, but tweaked the yield curve control policy, keeping the target band unchanged but giving more flexibility with a hard cap at 1%. The Japanese CPI data surprised to the upside recently, with the core reading reaching again the previous high. The unemployment rate surprisingly jumped to 2.7%, although it remains near cycle lows. BOJ Governor Ueda over the weekend said that his focus is on a quiet exit from the monetary easing and added that the BOJ should have enough data by year end to decide how to proceed. The Japanese wage data last week showed a slowing in wage growth, and this is something the BOJ focuses on particularly. Now on the daily chart, we can see that USDJPY fell to the upward trend line and the red 21 moving average following Ueda's comments over the weekend. The price then bounced back as the buyers land on the trend line to position for another rally into the highs. The sellers will need the price to break below the trend line to switch the buyers more to the downside and target new lower lows. On the 4-hour chart, we can see more closely the downside gap here at the open and the sell-off into the trend line. The buyers then piled in around the trend line and the 50% Fibonacci retracement level to fade the sell-off and target a new higher high. This is still a buyer's market with the 150 handle as the ultimate target. On the 1-hour chart, we can see that we have a swing high here around the 147 level. If the price breaks above it, we will have a new higher high and the short-term market structure will turn bullish again. That's when we can expect more buyers to come into the market to position for further upside. This week we have many important events, beginning with the US CPI tomorrow, which is expected to show an increase in headline inflation but further disinflation in the core measure. On Thursday, we will see the latest US jobless claims, PPI, and retail sales data. Finally, on Friday, we get the University of Michigan Consumer Sentiment Report. Given that the yield differential is what is still driving the USD JPY higher, weak US data should lead to a depreciation in the pair, while strong data should lead to further upside.